Okay, guys, let me do a little breakdown market analysis on gold for you guys. Just a simple market analysis on gold. So what I'm going to do now is to mark the high and the low of the daily time frame. Let's go and mark the high and the low of the daily time frame. This is when the market start coming down. This is the place the market started coming down. So mark the high, then we mark the low. This is the low. This is the low. So don't marking the high and the low of the daily time frame. You need to just go down to the forward time frame. This is the forward time frame. You can see that the market is pushing up aggressively from this spot. Let me show you the place. The market is pushing up aggressively from this place. And see that the market is pushing up. The market is pushing up aggressively. So this is the forward time frame. This is the forward time frame. So let's break down the chart now. You can see that the market pushed towards the top. The market pushed up and started consolidating and giving a rejection candlestick and dumped back. So let me show you the reason. The market dumped back. There is a fair value gap at that spot. That's why the market dumped back. You can see the fair value gap. Let's map out the fair value gap. This is the fair value gap. So this is how to break down the chart. Break down the charts. Very simple, simple by simple, so you can be able to take a trade. I see the fair value gap there. The market reached that fair value gap and started rejecting. So as a trader, you can see that the market started rejecting at that fair value gap. If you are a fair value gap trader, you are going to go in for your entry. That's a short. You're getting on shorts on this place. Targeting just typically 1:2. Your SL is going to be on top the fair value gap. That's typically 1:3, and your TP is going to be smashed. You can see it. You can see it right there. So this is how to break down the charts. Very, very simple. Also, if you're not a fair value gap trader, you can also map out your order block. Because this is your order block. This level is your order block. This place now is your order block. So when the market now, if the market didn't test on this fair value gap, like give a formation on this fair value gap, give a rejection, you are going to enter on this place. This is a mistake. The market didn't give you a nice formation to get in on the fair value gap. Maybe the market is like going to, from here, retest at this magnet zone and give you a double top, then push back down. And you're going to get in on the order block, getting a nice trade, because the order block is simplest trade. I always like trading. You get in on order block, you target the lowest of the daily time frame, then you tighten your stop loss. That's typically 1:4. So that's how you catch your entry. So you can see that the trade is, the candlestick is still pushing up. So this candlestick is going to go and retest on this order block. That's the time you are going to take your trade, giving a double top. The double top, when it goes to the first time, you reject it and come back again and giving a double top. This is a double top. You're targeting this low.